and total assets of $4.15 billion. For Granny J, or the small mid-cap Granny, the price was $27.80, NAV of $27.83, and total assets of $391 million. And for Granny I, which is the income-oriented large-cap Granny Shots, the price was $20.15, NAV of $20, and total assets of $58 million. I want to talk about year-to-date performance. Year-to-date, Granny Shots is up 1.18% compared to 1.11% for the S&P 500, or relative outperformance of 7 basis points. For Granny J, year-to-date performance is 8.96% compared to 8.5% for the Russell 2500, which is 39 basis points of outperformance. And for Granny in the S&P 500 in terms of market cap, so the S&P Mag 7 is actually smaller than the gold market. And as I've said before and many times in the past, a continued rise in precious metals is not sending a great signal for equities for multiple reasons, but part of it, of course, is it's a vortex for risk appetite. The second is there's been a rotation in what I call armies versus bullets. The armies are the Mag 7 and the bullets are the AI suppliers. As you can see, markets have rotated from favoring armies, which are the companies that have great businesses, to the arms makers. But here's the thing. We've now created a valuation discrepancy. In the past, the armies always traded at a premium to the bullet makers. But as you can see, in 2026, that has flipped, and now the armies traded at more than a 3-point PE discount to the bullet there. So software has fallen to the lowest prime brokerage exposure ever, according to Goldman Sachs. Crypto's also been under pressure. A lot of that has to do with the outperformance of gold and risk appetite. The Fed, with the new Fed chair, the market's trying to understand this new Fed chair, and I'll talk about it in another video, but the market always tests a new Fed chair as well. Tangentially, keep in mind the Epstein files, I think, have continued to sort of remain a headline story, and it's creating a lot of high-profile embarrassments. And of course, most recently, private credit is again resurfacing because of some of the concerns about companies like Blue Owl, and people believe there's echoes of the GFC. Now, something that is roiling markets, but I don't think it's making it feel like a bear market, is the tariffs. The Supreme Court, not surprisingly, overturned Trump's tariffs, and President Trump, in turn, is actually implementing, well, originally materials and healthcare. They were actually zero weights in granny income before, but now they're 8, 7, and 3%. So they've gone from 0 to 18%. For Granny J, industrials, information, tech, and financials were originally 74%. They're now 63%. And energy and healthcare were 8% in the portfolio previously, and they're now 16%. So that's really where the changes have taken place. It's energy and healthcare and materials. Now, these changes are not taking place because of the macro themes of energy / cybersecurity, millennials, global labor suppliers, or easing financial conditions. It's really because of style tilt, seasonality, and the PMI recovery shifts. Okay, and these rebalance every 3 months. ONEOK, Amgen, Air Products, Packaging Corp, PPG, Northrop Grumman. Now on SMID Granny, there were a lot of 11 removals, which is a lot, and 18 additions. Okay. Carpenter Technologies, Curtiss-Wright, Exelixis, Halozyme Therapeutics, Valmont Industries, Array Technologies, Fabrinet, Hyatt Hotels, Domino's Pizza, Elf Beauty, Carrier Global, United Health Services, HF Sinclair, Huntington Ingalls Industries, DT Midstream, Energy.
Is this drawdown different, though, 50% from its October highs, because of the institutional adoption, because of support from regulators in Washington?
Yeah, Tim, it's a really good question. I think the observation that we've seen this before in Bitcoin is completely accurate. We've been helping investors gain exposure to Bitcoin since 2017 at Bitwise. We've been through bear and bull markets, those 70% drawdowns that you mentioned. So we've seen this before. We're used to this kind of volatility in crypto, and our clients expect this kind of volatility. Now, I do think this time is different than before for a number of reasons that you highlighted. We have massive long-term tailwinds that we believe will propel the market higher over the long term, but investors get anchored on short-term news and negative headlines and this volatility that they're seeing, and they forget the long-term thesis for Bitcoin has never been stronger. We have regulatory tailwinds, we have institutional adoption, we have the rise in demand for hard assets. So I do think that we will see consolidation across the space. It's a tough market. Margins are tight. Inflation, rising energy costs, those certainly hit miners where it hurts, and the falling price of Bitcoin doesn't help either.
Hey, Ryan, I'm wondering about the place of Bitcoin right now. If we've seen drawdown in Bitcoin close to 50% from those October highs, and other risk assets like equities, for example, you know, the NASDAQ 100 only down about 4.5% from all-time highs a few months ago. Why are we seeing crypto affected so much more, even though its maturity, even though it's more mature right now than it was?
Yeah, even though Bitcoin's more mature now than it was 3 or 4 years ago, Tim, it's still very early in Bitcoin's life cycle. It's only been around since 2000. ETF outflows in pain, those things have all drawn liquidity out of the crypto ecosystem, which has hurt the price of Bitcoin and other crypto assets more dramatically than other risk assets like equities. But what I believe that means is that when we see liquidity come back into the ecosystem, we're set up very well for a very strong rebound, because while liquidity's been low, positive developments have been high, and that means that there's a mispricing of these assets.
Well, in the meantime, we're seeing Bitcoin just kind of bump along here at about 65,000. There's always a clearing price. There's always a bottom for any financial asset. What is the clearing price for Bitcoin? I know this is a loaded question, but where is the bottom? What is the bottom? How do you think about answering that?
Well, it's hard to predict price movements. As you mentioned, we think there's a floor in between the 50 and 60K range where investors will likely go.
Well, I mean, we're still waiting to see the data on who's buying what, and certainly Strategy keeps buying, even though their assets are underwater. The jury's still out, certainly, on that, Ryan. Before we let you go, if there is this catalyst of moving ahead of increased adoption, that's your number one catalyst, institutional adoption. Why are institutions excited to buy after a drawdown like this and with no clear, other catalysts on the horizon?
I think institutional investors that we speak to at Bitwise are really excited about having access to Bitcoin now. They haven't had access to Bitcoin before the ETFs. As I mentioned, they're just starting to get approved to have access to those. And so their clients and their portfolios just haven't been able to get exposure to Bitcoin. And so they sat on the sidelines